Wall Street is seeing red today. We did get a handful of economic data releases, but it's about sector rotation as well as geopolitics and central banks. So joining me now is Tim Anderson of TJM Investments, and he'll weigh in on everything ahead of Friday's jobs report. Tim, great to have you here today.
It's nice to talk to you.
Well, we are seeing red for the equity markets, but the averages have still paired gains considering where we are right now. Now, given everything that's happened in terms of the central bank minutes from the Fed as well as ECB, where do you see prices going this summer?
You know, I think that the market has been really spoiled over the last 4 or 5 years by perfect information from the Fed. And if you go back to 2013, when the Fed first started talking about cutting back their QE program, the market threw this big temper tantrum known as the taper tantrum. And after that, the Fed buckled and started giving the market perfect information on timing for everything. And that leads us up till yesterday, when really the market didn't like the fact it didn't get perfect information from the Fed on when and how and to what degree it's going to start to cut back their balance sheet. So I think that the market needs to get over this spoiled little 7-year-old routine where if they don't get every single detail they want from the Fed, they're going to throw a fit. We're 1.5 days into the second half of the year, and we're still going to have this vibrant rotation that we've talked about numerous times. Maybe if the reflation trade starts to come back a little bit, we've seen a little bit of an indications of that. The financials are probably ripe for a move.
And Tim, indeed, as we head into tomorrow's session, we'll be digesting latest comments from central banks as well as economic data. Now, we did get the ADP employment report. It did come in below expectations, but we did get a better than expected ISM services reading. But given all the data as well as expectations for tomorrow, what do you expect to see in U.S. jobs figures?
You know, it'll be interesting because the non-farm payroll numbers have significantly underperformed the ADP numbers now 2 months in a row. That's not going to go on forever because last year, even though there were disparities on a monthly basis, by the end of the year in 2016, the variance was only 10,000. So I wouldn't be surprised to see this jobs number tomorrow be stronger than expected and stronger than what we saw from ADP.
And last but not least, Tim, I'll have to ask you about geopolitics. Now, heading into Friday's session, of course, all eyes will be on the G20 as well.
Sure.
And any comments out from President Trump as he is in Europe right now. What do you expect to see in terms of the current tensions that are weighing on the markets?
Well, he gave a stirring speech this morning in Poland. It was very, very well received. And I think at the G20, it depends on to what degree the Merkel wants to really press hard on the trade and immigration and global warming policies that clearly President Trump has not completely bought into by any stretch of the imagination. And you also have some very large personalities at this event: Trump, Putin, Erdogan, just to name 3. How will Merkel kind of manage any of the tensions or media or interaction between those 3 will be very interesting to see.
Okay, Tim, well, as always, great to speak to you and great to have your insight as always.
Thank you so much.